What's up, guys? Todd Robinson. I'm the founder of Multifamily Deal Makers. I'm also a real estate investment and finance lawyer with my own portfolio of over 750 units and $80 million of assets. I wanted to make this video specifically for the brand new real estate investor that wants to learn how to raise capital. And I want to talk about how do you raise capital and kind of go through a little bit of a checklist to make sure you understand the different aspects of raising capital. Now, this video is assuming that you know how to underwrite, you know how to evaluate multifamily deals, and you're just ready to raise capital, right? Kind of a step-by-step guide. Now, if this is something that you find interesting and you want to get into this business, I want you to click the subscribe button right now so that you can make sure you're up to date on other videos that I post. So, first things first, you're getting ready to raise capital, right? You want to determine your capital needs. What are your capital needs? What's the total project cost? What's the acquisition cost? All right, you're going to have first, let's say it's a $10 million deal. You're going to get a $7 million loan. You got to raise $3 million of capital, right? That buys you the property, but also you need to factor in closing costs. You need to factor in your acquisition fee, right? You need to factor in reserves. One thing that people always forget, you got to replenish the security deposits at closing, right? Because you'll get a credit for that on the closing statement. So it's a $3 million acquisition, $3 million capital raise, but you need, I'd say, probably $3.5 million to cover all of those needs, right? So once you figure out you need $3.5 million, what are you going to do next? Hopefully at this point you have an investor pipeline. Now, if you don't have an investor pipeline, you need to create one. And I want you to first get out a spreadsheet and write down all of your friends and family, right? Everyone that you know, that you've ever come in contact with, that you think may have some capital, right? These are high W-2 earners, potential elderly, your uncles, family members that may have some capital or access to capital. That's going to be your first line of defense. That's going to be your first people that you're going to target, right? These are high net worth individuals that, again, you may be a little uncomfortable asking them for money, but you need to at least write them down so that you know who they are. And then we'll talk about how to get in front of them to raise capital, right? Look at real estate syndication platforms, friends and families, family offices, right? And then have these conversations with these investors. Now, these are you're raising capital for the very first time for an active deal. It may be a little too late to even do this, but ideally you're starting this process along kind of in parallel of either learning how to buy multifamily or you just know you're going to get into this in the future because you really want to be raising capital and starting the nurturing sequence of how to nurture your investors long before you have a deal in the pipeline. So once this list is made and you're contacting them, you're having meetings, you're understanding their investment preferences, right? What types of deals, how much capital could they potentially invest, right? And if they say, now's not a good time, then you say, okay, I understand that. Would you be open to just receiving information about future deals in the future, right? They say yes, 9 times out of 10. And then guess what? They're on your list. And you need to just start nurturing those investors. Let them know that you are an expert in this area and let them know that you're going to have a deal for them to invest in shortly. So let's move to, once that investor list has been created, I'm not even going to get into these different exemptions. Let's just talk about what do you do to actually raise the capital? The next step is you need to prepare what's called an investment offering. Now, if you're going to be making this offering to your friends and family or to potential strangers, if it's under a 506C offering, right? A 506B is what we call a friends and family exemption. You can only raise capital from non-accredited investors. You can raise capital from only 35 non-accredited investors and up to as many accredited investors as you wanted. In a 506C, you can only do accredited investors, but you're allowed to advertise. So that's the video for another day. So once you create this investment offering, you need to have your deal highlights in there. You need to have your executive summary, your project details, your financials, your timelines. Ideally, by this point, you will have also created a financial model that describes to the investor what are the splits. Is it a 70-30 split, a 60-40 split? Are there any preferred returns? What are the investment amounts, right? So this is your offering memorandum. You're going to create this into a visually appealing document. You can use Canva. There are now AI platforms. DRE is one that we've used in the past. and you're gonna create that and then send out to your investors to get what's called a soft commitment. That's really a conversation where they come back to you and say, yeah, I'm interested, looks good, put me down for 100 grand and let me know what's next, right? Boom. You now put them into your nurturing sequence, you put them on for the deal, and then the hardest part is actually getting the check out of them. So it may be a situation where you have to ask them a couple of times. Once you get closer to actually closing the deal, make sure you get that capital in at least 2 weeks before closing so that you're set and have it ready to go, right? I would also create a kind of a one-pager. Sometimes a one-pager can be helpful if someone doesn't want to read an entire investment offering document. But alongside the offering materials, then we get into what the legal documents are, right? So your attorney, if it's me or someone else, would prepare the operating agreements for the investors, the operating agreement for the, right? They also prepare what's called a private placement memorandum. That's an actual disclosure document that really protects you as the sponsor and discloses all of the risks that are associated with investing in real estate passively like this. So also these subscription agreements, once those are done and you're ready to go, you're ready to pitch your deals, right? You have the marketing materials, you've got the legal compliance documents, you've nurtured your investors, you're now ready to go out and market this opportunity. Now, whether you're marketing it to pre-existing substantive contacts under a 506B, or you're marketing it to brand new strangers, right? You're gonna go attend real estate meetups and events, and you're gonna meet potential strangers there. If that's the case, it has to be what's called a 506C offering. It cannot be a 506B offering. All right, that's very critical. Now, definitely use social media, email outreach campaigns to reach potential investors. Again, friends and family or strangers. Now, once you have your investors who have committed your soft commitments, you would verify whether they're accredited or not, and part of the documentation, you'll receive what's called an investor questionnaire. In that questionnaire, they will list whether they are accredited or not. Make sure you're aligned on expectations, timelines. Make sure they are able to send the cash to you. Typically, wire is best. And then you go ahead and you collect the commitments. Collect the commitments typically two weeks prior to the scheduled closing date, right? Because just, from a closing perspective, your lender is not going to fund their loan until they know that all of the borrower's equity is in the title company's account. So people may not understand that, but you got to make sure that money is in prior to the lender funding their portion, right? Now, you raise capital. So in our $10 million deal, let's just say all this goes along swimmingly. I know this is kind of a high level view, but once that capital is in the title company account, you're ready to close. Lender wires in the cash, and now you bought yourself your first multifamily deal. But the work does not stop there. From a capital raising perspective and from an investor perspective, you need to be as transparent as possible with timelines, renovations, occupancy issues. You make sure your investors know what they're getting, what to expect, and that you're creating a system for tracking distributions and timelines. We use a platform called Invest Next. Very good platform. There's lots out there, AppFolios, Juniper Square, a lot of these investment management softwares. But you are going to be tracking your investor distributions and communication really through that software. And then, of course, once the project is done and you have paid out your distributions, let's say our $10 million property example, you sold it for $15 million. You've got all this profit. You're going to build in financial reports along the way. You're going to distribute the profits to your investors. And then at that point, the project will be closed out. And the best number that you're going to come up with is your track record, right? How much did you give back to your investors? What is the internal rate of return? What's the average cash on cash return for your investors? What's the average annual return for your investors? You're going to want to know that because that's going to be your biggest data point moving forward when you move to your next capital raise. So if you like this, I want you to subscribe down below and get in touch if you're interested in being mentored by me on how to grow and scale a real estate portfolio. Make sure you get in touch with me through the links in my bio.